On episode 94 of the Meat Mafia podcast, we were lucky enough to be joined by Parker Lewis. Parker is the head of business development at Unchained Capital, a Bitcoin-only financial service company, and he's written extensively about the use cases for Bitcoin in his blog, Gradually Then Suddenly. He talks about Bitcoin as the great definancialization, and we talked to Parker today about how Bitcoin plays a key role in rewriting some of the incentives around food. And we were lucky enough to be hosted in his space at Unchained Capital, which is also used to record TFTC's podcast. And the running joke amongst the Bitcoin community in Austin is that Parker's going to run for mayor one day, so hopefully, and maybe, I'll have to redo these show notes at one point to make sure to include that. But without further ado, Parker Lewis. This episode of the podcast is brought to you by Equip Foods. Equip provides a complete source of grass-fed beef protein with no added chemicals, fillers, binding agents, or artificial coloring or sweeteners. If you're familiar with the supplement industry, you know that most supplements are loaded with ingredients that you can't even pronounce. Equip's Unflavored Prime has one single ingredient derived directly from grass-fed beef protein. For purists like ourselves who try to only consume balanced, real sources of nutrition, this protein powder checks all the boxes. Go check them out in the link below and use our promo code in the description to get a discount. Holy Cow Beef is a regenerative farm based out of Lubbock, Texas, with humanely raised grass-fed, grass-finished beef available for sale and shipment. Companies like ButcherBox source from outside of the US and Australia and don't specifically have the American Grass-Fed Association, or AGA, label, but Holy Cow does. They also sell chicken and pork in addition to their amazingly high-quality beef raised right here in Texas. Ann and Warren Weldon have overcome their own health struggles, and they have inspired us through the way that they choose to live their lives and the way they raise their animals. So please support them and go check out their website in the link below. Also, if you're in Colorado, go check out Rick Ranches, a grass-fed, grass-finished regenerative farm servicing all over Colorado. He also accepts Bitcoin, so all you Bitcoiners out there, go hit up Rick Ranches and get your beef today. This episode of the podcast is brought to you by the Carnivore Bar. The Carnivore Bar is an animal-based, shelf-stable product with only 3 simple ingredients: beef, tallow, and salt. The bar is inspired by the ancient traditions of Native Americans who needed to create pemmican bars to preserve meat for long-distance travel. The Carnivore Bar is perfect for animal-based athletes or busy people looking to follow a low-carb diet. It's easy to throw in a bag and take with you anywhere you're going, whether it's a workout, hike, or even packing it for a snack at work. I throw them in my triathlon bag and take down a bar immediately after working out. They're a fantastic product, so go check them out and use our discount code in the link below. Parker, welcome to the Meat Mafia podcast.
Good to be with you guys.
Yeah, thanks for coming on. We wanted to have you on for a good period of time. So luckily, Annalise had connected all of us on Saturday. We didn't know you were going to be there, and now here we are.
It was fortuitous.
Seriously, it was. It was. And also, dude, thanks for putting this space together as well. Harrison and I were talking before. It's pretty incredible, the community that you've all built here through the space.
Have you guys explained to your audience before about what the Bitcoin Commons is?
I don't think we've had the chance to. We had Marty on, but I don't think we dove into it fully. But like we've been here before and just seeing the community and how they've engaged with the space. It's so valuable for the Bitcoin community to have this. Like it's in the vision of just putting it all together and giving everyone like one common spot to actually start thinking about Bitcoin in Austin and in this uniform way is really cool.
Yeah, so I mean, part of the inspiration behind it was really it dated back to when the lockdown happened. Mm-hmm. And at our old office, which is just 2 blocks away, we used to host BitDevs, which is a Bitcoin developers meetup, highly technical, but everybody's welcome. And we would open up our office for Austin BitDevs. And then when the lockdown happened, we were shut down for a few months. But then a bunch of us went to BitBlock Boom, which also, just this kind of next couple of days coming up here in Austin. But we were able to restart the meetup because we were in control of the space. But it was pretty disruptive, but at the same time it was important to the community to have a place to get people to come out, to share ideas, to be together. And I think that a lot of us gained a greater appreciation after the lockdown of just how important the community was, particularly the Bitcoin community here in Austin, and that when we were needing to increase the size of our office and expand to a bigger footprint, that was really important to us. And so this really kind of gave us the opportunity to expand on the vision of being able to have a place to host a monthly meetup to a space where the Bitcoin community can have a shared space to work, create, and produce content, and ultimately to advance Bitcoin. And that whole process of kind of creating the space. We're in Marty's studio, TFTC studio. It's the TFTC studio, but there's so many people in Austin that are creating content and podcast people that when they travel through town, it's a very collaborative space. And a lot of people in Bitcoin talk about how there is no Bitcoin community, because people use it in a very general term, but there is a community in Austin, and there are communities all over the place locally, and those communities, specifically in advancing Bitcoin and advancing not only the infrastructure that's being built, but the knowledge distribution. It's really important to have spaces like these. So we've had this space for about 6 months, and we just hope to expand further and further on the mission.
Yeah, there's kind of a few interesting themes there where there's this decentralized virtual money that needs centralized in real life community aspects to make it grow and continue to move it forward. So you are kind of like acknowledging the importance of that with this space. It's like we do need to build some community around Bitcoin in some ways.
Yeah, it's like while there is no community, there's communities all over the place, and those communities are really important because that idea of Rome doesn't get built in a day, but also if you put a bunch of people that have values aligned, working on various different parts of the ecosystem, that those ideas and the ability for people to produce will actually be accelerated by being around Bitcoiners. And before we used to have one single meetup, the Austin Bitcoin Developers Meetup. Now we host 4 meetups a month.
Wow.
We've got the Austin Bitcoin Club, Austin Lightning Developers Meetup, Austin Bit Devs, and then also the Austin Bitcoin Design Club. The studio's here so people can record more and more podcasts, even when Marty's not in town, and then also people can co-work. And it is just that idea. There is a high degree of randomness, and that's really how I think about it. Is there's a high degree of randomness in how Bitcoin was able to become what it was, and it was. And that randomness was introduced because of the decentralized nature. But there's nothing stopping people from creating a space like the Bitcoin Commons or creating a studio, and that if you put good people in the same place at the same time, you can't predict exactly the good things that will happen, but you know that they will. And so that's really what this space is about.
Totally. And I think there's this misconception too, to your point, during COVID, that Teams and Zoom and these virtual setups would be able to replace what you can get in person, which I think the 3 of us agree it couldn't be farther from the case. And it's like, you could almost do I would think about it from a job perspective, so you can do 80% virtually, but that last 20% of that intangible in-person connection or relationships that you form, there's nothing that actually beats being in person. So that's why it's so cool that you guys have this space, because I look at Harrison, who moved here in October of last year. I mean, some of your closest friends have come in the Bitcoin community, in this exact spot at the Commons.
Yeah, my first friend was made in the Commons. It was at Capital Factory.
Yeah.
Which is where one of the old Austin Bitcoin clubs.
Every other one of your friends came from the Commons.
Yeah.
Yeah.
No, it really is. It's there is something fundamentally different about being on screen with somebody versus being in person, and part of that is actually the nature of the one-to-one connection that you have with people, but the other part is the reintroduction of randomness. When you come to Bit Devs or the Austin Bitcoin Club, or you come co-work, you don't know who's going to be here on any given day, and you really can't introduce that degree of randomness or the exposure to more people, or to expand connections, or connect the people that know other people that would be of interest to whatever projects that you might be working on or could help accelerate them, without a venue like this.
Yeah.
And it's also, there is just a human connection that that you can know it by, if you have a conversation with someone on Zoom versus being in person with them. It is it's hard to define the difference, but it is just fundamentally different.
Yeah.
And I think we went to this world where, truthfully, it did reshape the way that a lot of people do business, and in many ways, for the better. but in other ways, it eliminated something that was absolutely essential about people being together in a space, not just for the sake of community, but for the sake of, just, and I think a lot of us experienced this when we went to BitBlock Boom in 2020. It was 4 or 5 months after the government lockdown, and it was such a freeing experience that it's almost like you couldn't appreciate what was lost until you went through that, and then once we got that back, we're like, never again.
Yes.
And that when we came back, or we're on our way back from Dallas to Austin, we kind of all were a group of us that committed to restarting the meetups, and it was pretty funny because people would walk down the street on Fifth Street and there'd be a bunch of people, in a tight room with no masks on, looking at us sideways, but it was, I think, a collective recognition that community does matter, being in person matters, and there's just there are very critical and important things that you just can't replace without being in person.
Yeah.
How cool is it to see Austin kind of develop that reputation as the hub of Bitcoin, having been from here and also just being a big Bitcoiner who's obviously doing a lot to move the needle forward in terms of adoption?
Yeah, it is rewarding to see. It's also, I oftentimes do joke about the fact that Austin is the Bitcoin capital of the world, but it's not because a few Bitcoiners in Austin are shitposting. That people can draw the analogy of there being something in the water, and in the figurative sense, in Austin there is. That it's no coincidence that Austin has emerged as such a large and growing hub for Bitcoin development. That doesn't just mean programmers and developers. That Austin is drawing a bunch of creative people that are delivering value to Bitcoin in more ways than just software development. And I think that in many ways it's happening because of something fundamental to Bitcoin and something that's fundamental to the state of Texas. And then there is history in terms of Austin developing into a tech center over the last 2 to 3 decades that kind of, before Bitcoin ever exists, laid this groundwork that when Bitcoin did emerge on the scene and people kind of looked around, specifically in the United States, but practically speaking all over the world, because there's developers here from all over the world, that in a much more deep-rooted way kind of laid the foundation for Austin to be this hub that has emerged and will continue to emerge. But it is rewarding to see to kind of create opportunities and to help be an accelerant to that process. And then, really kind of, and I think most people who work on Bitcoin do it for individual reasons, but also there is a deeper purpose and a deeper mission where you want to work on a project that's bigger than yourself, and to help be part of creating multiple different avenues to deliver value in that space is definitely rewarding. And I do like to shitpost on Twitter too, and have friendly competitions, because in the future every city is going to be a Bitcoin city, but we've got to get to the other side, and also being around Bitcoiners is a selfish part of it too. There are consistent, not identical, but there's a consistent value set that Bitcoin tends to that are found in people, and that Bitcoin helps draw out in people. And so if you meet somebody and they've started to grok Bitcoin and become a Bitcoiner, then you probably have a lot in common with that person, and there's shared values. And so in addition to working on a project that's much bigger than yourself, you ultimately end up getting to know and expand a friend circle or a friendship network with people that aren't just colleagues or contributors to different projects, but they're actually people that are worth building a community around. That's what we have in Austin, and I think that the more people that come and visit and get to experience it, that's what then draws people in, and there's essentially a kind of a gravitational force that just once that hub started, then it was kind of destined to explode.
Yeah, the shared values piece is interesting, because when we first met on Saturday, we were talking about the Beef Initiative, the Crawford, Colorado event, because you spoke at Kerrville, right?
Yes.
Yeah, and we were saying how, even though the Crawford event was only 3 days, we felt like we formed such strong relationships and bonds with the people that were there that it was almost like this emotional experience leaving everyone. And we were thinking to ourselves, we're like, how could that be after 3 days? Because I've never felt so connected to a group of people. And we were talking, we're like, it's the shared values of people that are there for Bitcoin. There's people that are there for regenerative agriculture, decentralizing the food system. So for you to create an environment like the Commons, getting a bunch of people with those shared values under one roof, it's like unbelievable what could happen, like that collective energy. It's so interesting.
It was the shared values and the no Wi-Fi.
The no
like
Wi-Fi.
People had to be present.
Yes.
Like every conversation you had, people were there, really fully engaged.
Yeah.
Which I think is.
Yeah, and like, so I went to Kerrville,
Mm-hmm.
which I think was in, I guess it was probably in April.
Yeah.
So 4 months ago or so.
Mhm.
But the first time that I heard Slim was on Marty's podcast.
Mm-hmm.
It was before this studio existed here at the Bitcoin Commons. But I think Marty had done one podcast, he had done a second podcast, and then Marty connected Slim and I. But then we did, and we spoke on the phone for 20 or 30 minutes. But then the first time that I actually met him was here in our office. He had, him and Cole from KNC Cattle, Cole Bolton, had recorded a podcast with Marty. And then they were, Marty, when he finished the podcast, just walked them down the hall down to our offices over at Unchained, and we were able to sit down, and I got to meet both of them for the first time. And then later that night, Slim and Cole were hosting an event at Cooper's. That's the exact type of degree of randomness that can happen when you create a space like this.
Yes.
Because, if they were recording over at Marty's house, in his backyard studio, they might not have come down the hall, and then maybe I wouldn't have gone to Cooper's that night, and then buying Bitcoin from Cole, buying stakes from Cole via the Lightning Network, and paying 2 sats, and being able to have a permissionless payment directly to a rancher.
Mm-hmm.
Earlier in the day when I sat down with Cole and Slim, I was explaining like my fundamentals of Bitcoin presentation to them. They had already kind of started going down that rabbit hole, but I was able to educate them further, and then I was able to be on the receiving side of the education later that night, and that was really where it started to click for me. And part of it was incepted by having this space here, and then from there we went out to Slim had asked me to speak at the Kerrville event, and it was just one day, and I think I'd like to experience one where it's 2 or 3 days where everyone's out there. But one of the things that Slim said was the reason why he picked Kerrville was because anybody who was there had to be very intentional about being there, right? That like rather than put it in downtown Austin or downtown Denver, where someone can fly in and just show up, that there were about 100 people at a Kerrville, and there were Bitcoiners that came in from all over the country, flew into Austin, drove 2 hours. There were ranchers that drove from West Texas, ranchers that came in from Colorado, anybody who flew in and had to drive 2 hours. That idea of like what you brought up of no Wi-Fi and being out there. It was also that anybody that went to, I believe it was Jason's ranch, they had to be very intentional about why they were going. And then what that creates is that you look around that group and you're like, okay, if everyone is here with being very intentional about having decided to go and making that investment of time and money, that there's a lot in common that would cause that same group of people to be in the same place. And you get to that place not like you're going to some random conference. You're going to that place and showing up and being able to be present, but then also start much further ahead in terms of kind of common ground with anybody else is there, interest in why they're there, who they are, than you otherwise would be with some random collection of people.
Yeah, you nailed it. One of the things that we were interested in is prior to that event at Cooper's and you meeting Slim and Cole, were you already like in your head thinking about the convergence of Bitcoin and beef and regenerative agriculture, or was it that event that really opened you up to that?
I had already been thinking about the importance of supply chains and the risks, right? So like when we had the lockdowns, they're like, shit, like I think one of the things that Bitcoiners appreciate in a broad-based way is the inherent fragility to the legacy financial system, and that ultimately means the inherent fragility to a lot of the resources that everyone just takes for granted. That there are very complex supply chains that deliver things that we consider to be very basic goods and services to market. And so, so in a broad-based way, I was thinking about those ideas, particularly around the lockdown and starting to see kind of shelves being empty. And so it was definitely something that was front and center. I had been focused more on the energy side. Bitcoin and energy have a more direct connection, given Bitcoin's kind of the nature of how Bitcoin is secured and the energy assets that are required to secure the Bitcoin network, and recognizing very similarly that those supply chains are very complex and that you need good money to be able to extract and develop and refine natural resources, and those natural resources as a second derivative are critical to with and in concert with sound money, the function of getting all other goods and services to market. Then when I met Cole and Slim, it kind of all those same dots connected very quickly, which was the same things that if money and energy are important, the money, energy, and food are like the three things that make everything else go around. And that when I was thinking about the complexities and the fragility of the current / legacy supply chains, that the ability to go across town, shake your rancher's hand, which I believe is a very powerful meme / just like once you do it, you say like, and we can, I'm probably not the best person to talk about the nutritional benefits of regenerative farming, but knowing that there's a very complex system behind all the things that happen at your local grocery store. And one of the things in some of the writings that some of my essays, before I even got down this path, one of the examples I would use to help people understand the coordination function of money, which ultimately Bitcoin is kind of taking on as a more primary role each passing day, is that if you walk into a grocery store and you just stop, like most people go to the grocery store and they get their 15, 20 items and they try to go, they mindlessly walk through as fast as possible and leave the store. But if you consciously walk into a grocery store and start to think about the number of people that would have to contribute to delivering all of those goods to market, and you think about each individual good, the packaging of each good, the shelving, whether it's beef or some packaged good or vegetables, whatever it might be, the actual building itself, the POS systems, all the technology, the inventory systems, the trucks to get the goods to market, and then each individual supply chain of each product, right? There's no fewer than 100 million people that conspire to deliver goods to you in a grocery store. Well, the other side of that is the coordination function of money. That doesn't exist without money. But in a highly fragile and inherently kind of unstable system, that while all of that is actually magical, it can also go away. And that this idea of building in greater redundancy and eliminating complexity in something as important as your food supply isn't just important from a nutritional standpoint. It's important of, if something happens and there's food shortages, being able to go across town, shake your rancher's hand, and be delivered the things that you actually need to sustain yourself is also incredibly important. And so I started thinking more intentionally about the connections between money, and not just money and energy, but money, energy, and food. Because all of those three inputs, really, kind of form the foundation of all other derivatives, but they're also very critical to the fulfillment themselves,
Yeah.
right? Like food, you need money and energy. Energy, you need money, and whoever's producing that energy needs a reliable food supply, and that those are really the three key columns
Yeah.
of our economic structure.
I want to dive in there, but maybe before you do, we're obviously like a nutritional health podcast. Some people are probably listening to this going, why the hell are these guys talking about Bitcoin? But I think it'd be great and valuable to people to just get your basic definition, orange pill on Bitcoin, and maybe just keep it, to that core level of like, why is Bitcoin important? Like, what is the reason for people to want to be interested in Bitcoin?
Yeah, I think the first time that when people hear Bitcoin, they almost instinctively now hear crypto. And so I think the first thing to lay out is that, when we have the Bitcoin comments here and we talk about Bitcoin, it is Bitcoin. I'm someone who personally believes, jumping to the end, that Bitcoin is the most transformational and important innovation that will ever exist in any of our lifetimes. And it's not like the next internet. It is something at a much more foundational level of the economic structure, and that is the nature and function of money. And most people, even when posed with that idea, don't know how to even contemplate what it means. Like when someone, when I ask people, what is money? It's not just that they don't have an answer, that they don't necessarily even understand the question. Because every economic assumption, equation, function that we consider in our daily lives exists assuming money is a given. Money's always existed, it's always been taken for granted, and before Bitcoin, people, practically speaking, and I had to approach this with high degrees of humility as well, because I fit in this definition and category as well, to question what money actually is, why it exists. Is it a collective hallucination? Is it a belief system? Because when you ask most people, it will become apparent that they haven't actually considered the question, and those that think they have will rattle something off like the collective hallucination statement, the belief system, or the government. Money has value because the government gives it value, or because they have the ability to tax. And I put forward that it's none of those things. That money at a fundamental level is an economic good that emerges on the free market and that helps to facilitate and solve one problem, which is trade. And to intermediate a series of transactions and ultimately to store value between those series of transactions. Now, when I bring Bitcoin into the context, I typically frame it with our money is broken. And most people feel that, sense that, without even able to know what money is or the why behind it. But that is ultimately the problem that Bitcoin is solving. It is designed to be a better form of money, and virtually everyone in the world suffers from a problem that they do not in any tangible way, or can in any tangible way put their finger on, like the why the money is broken. And so when I orange pill people, I just focus them on one fact, or one value proposition or statement. I tell them, say, Bitcoin is as complicated or as simple as you want to make it, but that all value in Bitcoin derives from the fact that there will only ever be 21 million, and that Bitcoin's true innovation, its 0 to 1 innovation, is finite scarcity. There's truthfully nothing magical about 21. What is magical is the fact that no more can ever be produced, and that what that represents in human readable terms is a form of money that can't be printed, and that everyone for their entire lives has been forced to opt in to a system in which their money is chronically and consistently or persistently printed or digitally created by their governments or the related central banks. Functionally and increasingly they are becoming one and the same, and that's a problem. It is a problem that if the landman goes out and landmen and operators go out and produce barrels of oil or natural gas, that they convert that, what ultimately amounts to them investing their finitely scarce time in work that is complex and hard to produce or replicate, and real value is delivered, to transfer that real value or to trade that real value into forms of money that can be printed literally by someone in New York City clicking a button on a computer screen, and they're doing that in the trillions of dollars. And so over the last 2 years, or 2.5 years as an example, the Federal Reserve has they've more than doubled the money supply. That is the problem that Bitcoin is solving. And people look at it on the screen and it trades like a stock, or they think about it like a stock, they think about it like an investment. But what it really is a better form of money, and it doesn't act like money or any money that people have known, but people have to accept the fact that they've never gone down that fundamental rabbit hole of what is money, and they're not well equipped or equipped at all really to be in a position to evaluate whether or not Bitcoin is money until they first ask that question. And once they start to build back up on first principles of what is money, what makes something a better or worse form of money, they will figure out at the end that the most important part is, and the most foundational element is the supply. That the foundation of anything, and particularly money storing value, is scarcity. And Bitcoin has, and its truly innovative property is finite scarcity. There will only ever be 21 million Bitcoin. What that allows you to do is to pursue work, anything you want to pursue in the real world, and deliver value and have an incentive to deliver value, and to be able to convert that into money that just simply can't be printed. And your alternate option is opting into dollars or euros or yen that just get produced out of thin air, and that causes whatever work or value you produce into the real world to degrade over time. And we can talk about it relative to, people in the food industry or ranchers. There are massive negative consequences to trading your finitely scarce time and producing real hard work, and converting that into a form of money that from that point in time will guarantee you to purchase less in the future. That there's massive repercussions to that, and Bitcoin simply takes the fly out of the ointment. But if there's one thing I tell people to take away from is all value derives from the fact that there will only be 21 million, and you've got a problem, you know it, but you don't know how to fix it. You know that it doesn't make sense that the government prints trillions of dollars, the central bank prints trillions of dollars, but if you had an alternative, that what exists is a knowledge gap. People don't understand Bitcoin, and if they go down that rabbit hole, what is money and is Bitcoin it, they will come out the other side, but they got to be exposed to the right resources, and that's what we also help people do.
Can you describe the moment when you first realized that Bitcoin is the best form of currency?
Yeah, it was a process, and it's a process for everyone. I think it's a process of eliminating mental blocks, of kind of peeling back different layers of the onion and asking certain foundational questions. And so, probably on my path to understanding Bitcoin, I first had to understand why gold was money, and most people do not. But what they have to accept is that gold, of all the physical things in the world, there's this one magical shiny rock that emerged as money. Could have been anything else. Everyone couldn't chosen anything. It doesn't mean that other people didn't use silver and that there weren't other commodity metals, but the entire world converged on one rock as the monetary standard. And without even needing to understand why that was the case, they have to understand that it happened. And then the question is, why, and was it by coincidence? And in helping, and it was actually Safety Namus, the author of the Bitcoin Standard, before he had written the book, but I had the fortune of starting a friendship with him. He helped me understand what makes something money or not. And that then provided the foundation for me to be able to see Bitcoin as money, because I started to think about the properties that make something a better or worse form of money, and then I was able to apply those principles to say, do these properties exist in Bitcoin? Because it always is an A/B test. If you're choosing to store your wealth in one good or another, or one money versus another, that there are core principles or core properties really that make something more or less viable or effective as a form of money. But it really was that. It was like kind of keying in on understanding why gold emerged as money, and then also understanding some very fundamental things about why money, based on its very nature and the problem that it solves of trade, which is inherently intersubjective, why everyone converges on one form of money. And so I really approached it from a macro of, understanding the properties in gold that caused it to emerge as money. And then I also just asked the micro questions of 99.9% of all individuals in the world and all businesses only transact with a single currency. That doesn't mean that there aren't multinational corporations that have treasuries that manage dollars and euros on a daily basis, and it doesn't mean that there aren't a few select individuals that wake up in the morning on the Texas-Mexico border and might use pesos in the morning and dollars in the middle of the day and pesos again in the evening. But functionally speaking, 99.9% of people that interact with money only transact on a daily basis with one form of money. And then the question also becomes why, and is it by coincidence? It's not by coincidence. And that when you start to dive in, and this is really where the light bulb went off for me, was that Bitcoin possesses the same properties that cause gold to emerge as money. Money converges to one based on its very nature and the problem that it solves. But Bitcoin does not just replicate the properties that existed in gold that it caused it to merge, and then the dollar emerged on top of gold, because the dollar doesn't have any inherent monetary properties, but that Bitcoin actually perfected those properties, and that those properties were finite scarcity, the ability to easily divide and aggregate larger and smaller units of Bitcoin, with one very kind of mic drop fact that you can now take this property of finite scarcity and send it over a communication channel. And that the aggregate of those three things are what is necessary for a good to be viable as a form of money. Scarcity, the ability to divide and aggregate, and the ability to transfer. It's not necessarily, it has to be over a communication channel, but that becomes a massive differentiator, that you can have something that is both finitely scarce and that you can also transfer that. Because if money is solving a problem of trade, you have to be able to trade something of value for value. And things that are scarce retain their value more than other things in the context of money. Something that is finitely scarce, that can't be produced, period, that becomes the optimal state of a form of money. And in the context of something digital, it just so happens too that in order to transfer it, you need to be able to do it over a communication channel. So it was kind of piecing those monetary properties together with understanding some of the nature of money. And then as soon as I figured out that one of the last things that was my hang-up was that Bitcoin was too expensive, and that not enough people would be able to access it. But then it was actually a conversation with my best friend Will Cole, who's also our chief product officer at Unchained. We were in the car in Wyoming, and he made a comment along the lines of, Bitcoin has to be worth at least X for it to be at all relevant in terms of transferring value. And there was something about that connected for me, that Bitcoin actually becomes more valuable as a good as it becomes more valuable, or as it becomes more expensive. And that what it ultimately translates to is being able to spend or transfer more value over the Bitcoin network or over a communication channel with less nominal units of the currency actually makes that good a greater utility. I don't think that's the last thing that most people will need to connect in order to see Bitcoin money, but for some reason that was like that's the last mental block that I needed to remove, and raced home and started reading more and more about Bitcoin.
It's always cool hearing people's stories about how and when the light bulb went off. Like I was, studied traditional finance in the university. Thought that assets were valued through either some sort of comparison or like discounting cash flows. So I'm thinking of like, okay, like how are they even deriving any value towards this asset? And you spend enough time, which I think is really kind of the key. It's like you need to think a layer deeper than what, almost in any other regard. You really need to think about what you're talking about, which is like, what is money? How do we use it in society? What does it mean? Like you can't just put your toe in and then expect to understand Bitcoin. Like there's so many, and there's also so many conflicting narratives and confusing narratives. Like people who want it to not succeed, right? Like, oh, Bitcoin's a religion, Bitcoin's a cult, and all these things that are out there. But when you actually like hit the pause button and focus on trying to understand what it actually is, there's actually a technological, and this is what you're saying, technological revolution that's happening here, which I'm curious to get your take on. Do you think that this is like the final evolution of money, where we finally have a currency that's like, hey, this is as good of a trust network that you have to actually like opt into, that will get in terms of money, it doesn't get better than this evolution?
I ultimately think that like certainly not in our lifetime, maybe not in 1,000 years, saying like never, that there can't be a state that is better.
Right.
It's hard to say never, but when you start to, I think to your point, like understanding Bitcoin, it is one of the, in my view, best investments of time you could ever make. Like if you wanted to become a rancher, how many hours or years would it take you to become a rancher? If you want to become, an oil and gas producer, like years of experience, massive, accumulation, massive amounts of capital. If you want to be a brain surgeon, you got to go to school for 10 years. If you want to understand the best secret that's ever existed in the world, the best form of money that's ever existed, you can get there, but it's going to make an investment in time of probably like 40 to 100 hours. And then you'll probably end up spending 1,000 hours over time. But like, that sounds like a lot, but you can't just dip your toe in the water. And the reason why you can't dip your toe in the water is because you have to understand something that has never been taught and that you've never questioned. And you have to approach it with high degrees of humility.
Yep.
But that's not a bad thing to say. It's not like, oh, you haven't thought about this. It's like, no one has thought about this.
Yeah.
And that when you approach it with that level of humility, be like, okay, every little thing I've questioned or thought about as it relates to a business and operating a business and the inputs of costs and driving revenue or valuing companies or valuing any investment opportunity, every single one of those assumptions built on top of the foundation of money working, of money existing. And what you have to question in order to get to an understanding of Bitcoin is why that money existed in the first place. Because that is the foundation to then evaluate whether or not this new economic good that's emerging will replace the existing. If you don't understand why the thing existed in the first place, which you've never questioned and that has never been taught in school, at least any school I ever went to, but that is also for very real reasons, that it's just always worked and it's always been taken for granted, then you will never get there. And so then when it comes to the question of like, is it the ultimate or the thing that can't be improved upon, it is not in our lifetime, and it's probably not in 1,000 years. Likely it will be never, but that is because, and this is based on my own perspective, that I do believe is rooted in fundamentally true economic principles, which is there is a best form of money, and it is the form of money that has the lowest rate of change, which ultimately represents a form of money that just simply can't be printed. And that if you get to a point of finite scarcity, something like that literally can't be printed at all, that in a terminal state there's a zero rate of change, that you mathematically cannot do better than that. It's not better if like the money you're holding reduces in supply or marginally increases in supply. It is simply that there's a form of money that can't be printed, and that's what Bitcoin has been able to achieve. That is the killer app. So the idea that a form of money would come and displace Bitcoin, when the most important function of money, that it's achieved in optimal state. And again, there's a lot baked into there too, which can't solve in hour and a half podcast, which is like the why behind that.
Yeah.
Like, why is zero rate of change? Like, it should be intuitive that, a form of money that can't be printed at all would be the best. But then people have those questions. Well, what about, small amount of inflation? What about, like, why is that not better? And that there is a fundamental explanation which has to do with the function of money, and that money is simply existing as a tool that human beings have created, not as a hallucination. It's just like human beings created doors out of wood. The door is an hallucination. It's a refinement of other tools. That's the same thing that Bitcoin is, even in the context of gold. But in the context of Bitcoin, it is this refinement of tools that already exist to deliver a higher value good to market, which is a form of money that can't be printed. So Bitcoin's only been able to achieve that through, I would say, a combination of real world energy, cryptography, distributed systems, computing, but then importantly the currency itself, which is the glue, is the reason why all those other economic incentives hold together. And so to think that something else would come along that the best thing it could do is match Bitcoin's core fundamental value proposition with a fixed supply that nobody has to rely on trust in order to be able to use and access, and that it's also global and permissionless. Anybody in the world that's determined that has access to an internet connection can access Bitcoin and can benefit from that. So I don't want it to sound like a hedged answer. I personally believe that there's no amount of time that human beings will be able to come about with a better solution to it. But I'm also humble enough to say, like, yeah, maybe in 1,000 years, humans have screwed up Bitcoin more likely somehow, and that they then need a better solution, and that they need to improve upon not just engineering for a fixed supply, but doing that in a way that eliminates some unknown or knowable risk. But I don't view that as something that is a here and now of this world phenomenon.
Yeah, it's almost like the amount of time and energy that would need to go into displacing Bitcoin, like, what would the trade-off be at that point? It's like it solves the biggest problem, which is that you can't create any more of it, and you can trust it and verify the network. So at that point, it's like unless something crazy happens where it's like interplanetary travel or something that's just like completely unexpected, that we need to redefine.
Yeah,
all these
I mean,
properties.
like,
I don't even know
people
if that makes sense.
like bring those things up, and it's like, I think there's a default position amongst a lot of people, and that encourage our audience. It's a lot of people think that if they spend the time to try to understand Bitcoin and try to understand it as money, that they won't be able to understand it. And there's this defense mechanism of shutting down and not going down that path, of fear that if they go down the path, that they aren't able to understand or know, because they think that it's too complicated. But it's really more common sense than anything. It is asking very basic and fundamental questions about, what A or B, what the government's printing a shit ton of money, and everything that I produce in the world purchases less in the future. That's not working. Here's this other option. Does this make more sense? And that it's like, if you zoom in too closely, it's what I've experienced, at least, is that it's generally a defense mechanism. That if you're explaining Bitcoin to somebody and it's clear that they haven't gone deep on some of these fundamental questions about what is money, and they start saying, well, what about X or what about Y, that they're more realistically putting up a defense to basically create an excuse or rationalize not going down that path for fear of not being able to come to the answer. And it's actually not that complicated. And that if you really focus in on minute details without kind of taking a step back and zooming out and asking the big questions, you'll likely never see it. But I also do encourage people that you don't have to be a software developer to understand the monetary incentives and the underlying structure that cause Bitcoin to hold together and ultimately solve a core and fundamental problem for virtually everybody in the world. And then once you gain an appreciation for that, you also gain an appreciation for just how important and transformative Bitcoin will be.
Yeah, that's super interesting. And one of the things I was curious to ask you about too is, like, I think you touch on the correlation between Bitcoin and energy, and I think that's confusing to the average person that hasn't really gone down the Bitcoin rabbit hole. Can you unpack that, just what that connection actually looks like?
Yeah, so think about how complex the energy supply chain is, without even being an energy professional, well, of which I'm not either. But think about, just imagine an oil rig, or imagine a drill, and that they've got to get all the goods to a certain location and had some way to figure out that there was likely oil 10,000 feet down in the ground, and maybe down and over, and that they had to coordinate all the human capital and all the physical capital, and that physical capital is the drill and the drilling infrastructure, all the things that exist on that site, and then all the casing and pipe that goes down, and then all of the sophistication and both technical in terms of, kind of understanding the physics, and then the human capital required, and then the extraction, and then all the things that require to get that into a pipeline, to a refinery, to be refined, to then build a truck, to deliver your food to market. That all that coordination does not happen without money. That like, go all the way back and just think about a drill or a well site. Think about how many different parts had to be manufactured, setting aside the complexity of the actual extraction, to build that. Or think about a car, even. Think about all the components in a car and all the different people that had to construct the car. That when I talk about the deep connection between money and energy, it is that you actually need money to coordinate the economic supply chain to extract natural resources and then develop them. And if you don't have money, then your ability to extract oil and gas from the ground that then gets refined to higher value products is not functionally possible. But if you don't have those energy outputs, the refined products, and then delivering other goods to market, the money isn't any good to you. So it's a very symbiotic relationship. You need good money to be able to specialize and extract more resources, but the very fact of having those resources makes the money valuable. And in Bitcoin and energy's context, it is real world energy. A lot of times people say Bitcoin isn't backed by anything. It's just a hallucination. Well, there's about 18 gigawatts of power that secure the Bitcoin network 24/7, and that power is distributed all over the country, all over the world, and rapidly seeking out the cheaper and cheapest resources to be able to produce power and secure the Bitcoin network. You don't get something of immense value without cost. And in this case, real world energy and the power that Bitcoin network. Then, if you start to understand the connection between money and energy, it will be that the energy is securing the Bitcoin network, but then the money is what will secure the energy supply chains, because it is a form of money that can't be printed. It is the thing that's going to hold value. And if people are doing incredibly complicated, complex, hard work, that they can't, that is ultimately their time is scarce, that they can't continue to be incentivized to do that work, to produce those resources, to get those resources to market, to refine them, to deliver higher value goods without a form of money that stores value into the future. And so, like, I really think about it as money as a first order and energy as a second order, and then everything else, but like probably food being on that second order as well, that they are critical to, if you think about more complex things like a telecom network or a water and waste management system, none of those things exist without money and energy either. And that money and energy sit at lower levels, but then all of that economic coordination, again, that requires humans and work, right? And those people cannot sustain themselves without getting food to market. And like, it's not to say, you know, if you start going all the way down the lines and making subjective, you know, kind of assessments of value of just how critically important something is to sustain, it's like, that's not the business that I'm trying to kind of articulate. It's more so that it becomes common sense, the most critical things that sit at the foundation. And when I talk about Bitcoin being transformative in the context of money, the Bitcoin network is secured by energy, and that Bitcoin will transform energy, in my view, as much as it transforms money, albeit I do believe that the monetary side is more and fundamental to, you know, how our current economic structure works, and that our current level of comfort wouldn't be possible without money existing and operating the way that it does. And that's what ultimately Bitcoin is helping to not only preserve but improve upon.
You've mentioned the word incentives a few times. I'm curious to get your take on how Bitcoin helps rewrite some of the incentives out there, because if you look at any system right now in society, particularly in the U.S. or, you know, specifically in the U.S., there's a lot of issues that are derived out of healthcare system, food system, monetary system that just come from incentives that are not properly aligned. So does Bitcoin help rewrite some of those incentives?
So I would think about like an X and Y axis, and think about like the beginning point of where the X and Y axis cross as being the point at which you deliver value. And that real world value could be, you know, getting beef, like producing cattle and getting cattle to market, and ultimately being an important part of the food supply chain and feeding people. And you sell that for dollars. You've invested not just like the last 9 months or 12 months into delivering a cow to market and beef to market. You've likely perfected a craft and invested resources over a decade or 2 decades. But think about that point of sale. My proof of work is that cow, and I'm selling that cow, and someone's paying me money. Well, in the fiat system or in the dollar system, from the point that you sell that, your work, the output of your labor, and your refined good, it will guarantee to purchase less in the future. There's a compounding and massive negative economic incentive evaluated in that. And at its core, what it is so you're telling me I'm going to deliver value to somebody else, but then I'm going to guaranteed in return for that value to get less in the future. You actually don't have an incentive to deliver value to other people. Because why would you produce value for someone else if all it was going to return for you was something less? Now, people produce value all the time and every day, but the point is, if you there's a lot that's screwed up about our economic structure and in the incentive structure, that while people are getting paid money, they might not be being delivered value.
Right.
And it's not in the subjective sense of me being the authority on like, oh, you're delivering Xboxes and I don't value that, so therefore it's not valuable. It means that the structure of the economic system is geared towards rewarding people that are not necessarily delivering value, and that what is happening as a matter of fact is that anytime someone delivers value and gets paid in a form of money that's guaranteed to lose its value, that on that individual transaction there was a massive disincentive, because the value you deliver today is going to purchase less in the future. Now, if I think about that same X and Y axis, so that's kind of like you produce value today, and then there's just a degradation. The longer you hold that, the less it's going to purchase in the future. And that is a broken economic structure. Now the reverse. You have a form of money that just magically can't be printed. And it's not actually magic, it's called Bitcoin. And it's enforced by cold, hard economic incentives that nobody can change. And what this delivers, if it's a form of money that can't be printed and that is finitely scarce, and it's kind of ignore the fact that Bitcoin's volatile and that it's gone up 200% in dollar terms over the last 10 years every year on average, but that just imagine it slowly increases in value. That what that represents is any value that I deliver to the world today will purchase more in the future. That actually creates the incentive to produce value to people around you. You now have both a selfish and collective interest at the same time. I can go deliver real world value, and merely by taking the fly out of the ointment that somebody can't print my money, I both get to benefit from the money that I receive and its appreciation in the future, and that I'm functionally not stuck on a hamster wheel. And so when you eliminate the disincentive to create value and you reintroduce the aligned incentive of I deliver value to you today, I have no guarantee truthfully I have no guarantee that money will purchase more in the future. Functionally speaking, it will if it's finitely scarce, but all I'm doing is eliminating the express guarantee that it will lose its value in the future. That what you then start to have is things operating in much greater harmony. Everyone thinking about 7 billion people that all had an economic incentive to produce value to other people in the world rather than the opposite. And it's really difficult for people to get their head around just how that difference of, like, imagine the y-axis and the x-axis of like being slightly above that versus slightly below it. It's like those two worlds couldn't be further apart. And that Bitcoin basically just takes the fly out of the ointment and reintroduces the economic incentive to produce value that other people actually, or output that other people actually value.
Are there any time periods or societies throughout history that you like to point to where you can say, hey, this society had a truly sound currency and these were all the positive externalities that occurred because the currency was sound?
I don't typically like to, I think there are instances of those. I think Safety in the Bitcoin standards does a good job of pointing to a number of those. I think, Florence was one of the examples, Rome another, and then on the other side, how society degrades or civilization degrades when money stops functioning. I try to, when I explain Bitcoin to people, to kind of focus them not on the past and pattern matching, but on really the first principles.
Got it.
Of understanding money as a tool, what it enables, and what it enables in a way that they can actually relate to in their daily lives. Not trying to envision what happened 400 or 500 years ago and trying to apply assumptions and account for different variables, but just saying, what is this thing, money, and how does it function? And if it enables trade, what are the forms of money that I would prefer if I was going to go out into the world and deliver value to others? What are the properties that I would value, and then what are the properties that others would value, and are those the same? That if they get to that first principle, then they're not having to rely on anybody else's historical experience. They're able to make a rational decision based on what they know about the world. And so I do think that there are a lot of historical examples. I probably would prefer not to choose one, but I would encourage people to read the Bitcoin standard, because understanding that context, I'm not saying it's not helpful, it certainly is, but I think that the more important exercise is kind of that very personal experience of kind of you understanding your own incentives and then understanding the incentives of everyone around you and what causes those things to become aligned, and then what the output would be of people being able to interact with a form of money and trade all over the world on a permissionless basis, and whether that would be a better outcome than what exists, because one side of the equation is very obvious. That's also how I came to Bitcoin. I figured out that the current system was really critically flawed. Critically flawed in the sense that it is broken and there is no fixing it. And I came to that conclusion entirely independent of Bitcoin.
Mm-hmm.
I think that when people go down that path, and some, like a way I encourage people is like, ignore Bitcoin. Ignore it as half the equation.
Yeah.
Ask the question, what is money, without even contemplating
Mm-hmm.
Bitcoin. And then come back and ask, does Bitcoin meet this criteria?
Mm-hmm.
Because if they start with the idea, I've got a problem, and most people, when they key in on the fact, it's like, most people qualitatively know that the government, technically speaking, it's central banks. Central banks create money out of thin air. They don't really know the quantity
Mm-hmm.
or the operation. But when they go down that path, and they're like, yeah, okay, so the Fed just created $5 trillion since
Yeah.
September of 2019, and there were $4 trillion-ish that existed before that. I don't have to have a high IQ or to be a computer scientist or software developer or cryptographer to know that that doesn't make sense.
Yeah.
Money doesn't grow on trees. I might not know what money is, but sure as shit doesn't grow on trees.
Yeah.
And so I've got a problem. And if you start to recognize that you have a problem, whether you understand Bitcoin or not, and you start to then think about Bitcoin in that context, but again, it's all relating it not to like what happened to some humans 1,000 years ago. It's like, I'm in the present day. I've got a problem.
Mm-hmm.
Some people are talking about how this is a solution to that problem. If it's a big problem, which it is, I mean, what do I got to lose to going down the rabbit hole
Yeah.
and seeing if these people that might seem crazy might not, maybe there's a chance they're not all just hallucinating.
Yeah.
Right. Go ahead.
I was just gonna say, do you ever get a pushback or question by friends and family that say, Parker, I love everything that you're saying, but I've been taught by my financial advisor my entire life to diversify. So like the concept of you going all in on just Bitcoin is foreign to a lot of people. Do you ever have people that say that to you just because they've been taught to diversify pretty much their entire lives?
Yeah, I do. And I think that it's that boiling frog phenomenon, people, this is the way the world's always worked, and I was supposed to do X, Y, or Z, and people kind of go on autopilot.
Mm-hmm.
And that's natural. And I think that people look at me, and whether they say it or not, they think that I'm crazy.
Yeah.
While at the same time, I sleep a lot better at night knowing
Yeah.
that my wealth is secured in the form of money that can't be manipulated, can't be printed, and that I have and hold something that the entire world absolutely needs, which is money. Like, human beings need money like they need water to survive. Because if they don't have money, they don't have good money, they literally don't get water, food, energy, access to basic health care. And what exists in the world today is information asymmetry, and also Bitcoin gets adopted as a function of time and human experience, and I know that that's just a function of time. So, but what I tell to those people is, you can never get to the position of, and also do not recommend it, but you can't get to the position of holding 95% of your liquid assets like I do in Bitcoin, without like developing a deep understanding of Bitcoin, because you can buy too much Bitcoin. And I didn't invest, when I woke up to the idea of Bitcoin being money, I didn't invest 95% of my money in Bitcoin as a Hail Mary. I didn't straight up invest 95% of my, I did it slow and measured and accumulated over time. And that there is just a fact that you cannot understand Bitcoin on a deep intuitive level without experiencing it. And the first time that you buy Bitcoin, you are going to feel like you're setting money on fire. Truthfully. Because the first time you buy Bitcoin, that's the hook, and you should buy some small amount. I don't like to say buy enough to such that you can afford to lose, but I do say buy enough such that if the price doubles or the price cuts in half, that you don't feel like you lost money or you don't feel like you made money. But experiencing Bitcoin, that becomes the incentive to learn more. You learn enough to want to take that step, but then actually securing a Bitcoin wallet and sending a Bitcoin transaction and going another deeper level. Like, you won't get to that deeper level unless you own some Bitcoin. And you can't understand how Bitcoin works without owning some Bitcoin, because you can't send Bitcoin transactions. And I'm not talking about on Coinbase, I'm talking about, having your own signing device and, interacting with a wallet on a direct basis and transmitting a transaction and seeing that the entire world is using this Bitcoin network, and they're sending Bitcoin transactions all over the world constantly, and all the money's getting exactly to where it's supposed to be, and only the people whose it is are able to access it, and there's no central third party. Like, that mind-blowing experience can't happen unless you're actually sending a Bitcoin, right? Or some small fraction. And so I encourage people that they have to go down the rabbit hole. And they have to get outside the comfort zone, because it's like, don't ask yourself the question about like the diversified portfolio if you haven't first understood what is money and why is Bitcoin it, and how does Bitcoin credibly enforce a fixed supply of 21 million. Because once you do, then you'll have the framework to understand why this whole diversified portfolio business is nonsense. I did write an article as part of my Graduate and Suddenly series called Bitcoin is the Great Definancialization. So I would encourage people, if people have that kind of question, that's one of the articles that I wrote specifically on this subject, which is human beings, particularly those in the developed world, have been conditioned with this idea that you have to make your money grow. And that in order to make your money grow, you magically put it in this stock account, and you're actually taking a lot of hidden risk, or you're investing in companies through structured financial products you don't understand, and you're taking risk. You're basically on your hamster wheel, working for money that degrades, and then you put it at risk because you're trying to outpace the degradation, and you have no concept of all the risks that you're taking. And so, imagine all the people at Fortune 500 companies, they just max out their 401ks and they go into these diversified portfolios. What they're actually doing is taking risks that they have no understanding of. Like most 401ks, like there'll be like 10 options, and I'll be like,
just a target date fund.
Growth, blue chip, bond, double B, and like they just like set percentages, and like just think about that. People are taking risks. They don't even understand what they're buying. They're just they're buying it based on a marketing word, and they're doing that on a mindless autopiloted loop. And that the idea that I talk about is that whole process is an output of storing wealth, or taking receipt of a form of money in return for the output of your scarce time, knowing that it degrades in value, that you're forced into this function of being in this quote diversified portfolio, and that once people understand Bitcoin and its economic incentives and its finite scarcity, that they will figure out that idea of I need to make my money grow was always a lie, and they really just needed a better form of money. And if they have a better form of money, then they can store their wealth without taking risk, and volatility and risk are different, and then they can focus all their time and energy on the thing that they're actually good at, their actual individual pursuit. If it's a rancher, accumulating more cattle, refining their process to make their end good more valuable, and doing that for more people. This idea that ranchers have to be stock investors, and teachers have to trade between the hours of 7 and 11 p.m. It's like it's actually crazy.
Wow.
It's insane. And so, but it exists because the incentive structure of the form of money they use is broken. They might not understand why. They might not even understand it. They might just be conditioned, but they do know that their money loses value over time, and Bitcoin fixes that. And that once you have that problem fixed, and I think about this myself, I store my wealth in a better form of money. I have wants and needs, physical, having real estate and needing to consume on a day-to-day basis, but I don't need to be a stock investor anymore. The stock that I own is in the company that I help run, and I'm able to focus all of my time and energy on building a business, and what I earn and save, I store in a better form of money. And if I'm storing in a better form of money, it will store value over time. And that is just something that's fundamentally not true in the legacy currency system, but it's not true principally because they create more and more of it, and they will always have to do it because it's something fundamental to that system remaining in place for the waning or dying years that it will exist.
Do you think it's a coincidence that the first country to adopt Bitcoin was outside of the U.S. and they actually had a bigger problem, like in terms of the idea that your money loses value over time? Like their problem for that specifically is way bigger than in the U.S.
I don't know about that. I think that it's more like high degrees of randomness that their president seems to have been orange pilled, and found some economic signal and then was able to act on it. That it's really a function of knowledge. And again, I've never met the president of El Salvador, but just seeing his interactions and the way that he talks, again, just saying in Bitcoin, which is verify, don't trust. So I think trust is built up over a period of time, and you never want to put trust in people that you don't know. But from the outside looking in, it was that he actually started to understand why Bitcoin was money, and then was able to take a forward action in the own interest of their country, or as him as an individual, or as a government, however you want to assess it, that they would be benefited by holding a form of money that couldn't be printed. I believe El Salvador is principally a dollarized economy, but that inflation of the dollar is a function of export. And so it's a path, just as it's a path for all individuals, all businesses, it's also a path for countries. I think that there's probably something to the fact that it's a smaller country and more concentrated with, for better or worse, and potentially worse, a leader that was able to engineer and be able to pull off. And hopefully it will pay dividends. I do think, though, that a lot of people think about, probably 85% of the world don't have access to any reliable form of money. And so we do live in a very privileged position, whether we're in the United States or someone is in Europe or someone's in Japan, of having forms of currency that are more widely adopted, but particularly in the United States with the dollar. And so people just naturally think that the places that will most advantaged by Bitcoin will be places that don't have money, and that will be true over time. But money is really a store of value, and there is something about storing value that you need to have value to store in order for that to be of meaning to you. And Bitcoin will help, in my view, pull billions of people out of poverty by affording them the ability to have a level playing field and to opt into a form of money that can't be printed. But that only happens as a function of trade. Those people need to form skills to be able to trade for and with people that have Bitcoin in order to then benefit from the property that they can now store their value in time and defer consumption to be able to accumulate capital. So that will all be true, but I look at it and I say the United States has the most wealth in the world. They therefore have the most to lose, therefore they have the most wealth to store, and they have the greatest economic incentive to adopt Bitcoin, kind of on an individual level, on a community level, the greatest standard of living on certain measures. Probably if we had better food, it would be an even higher standard, and some of those standards themselves are subjective, but by and large have a significant amount of wealth, have a significant amount of comfort that we exist in our current lives. That's what the function of money helps allow for and preserve. And so I like to think about it as like Americans, individual businesses, states, local, state, federal. We have the greatest incentive to understand Bitcoin. We have the greatest access to knowledge, and we also have the greatest ability to act on it. The greatest probably relative amount of freedom in the world, even if that seems to be constrained more and more, to actually act on it and to innovate and to benefit first, and then it will be distributed more and more throughout the world over time.
Why do you think it's so important for someone listening to this podcast to get their Bitcoin off of an exchange and self-custodian their own Bitcoin?
So I think the important thing to understand is that all Bitcoin are controlled by cryptographic keys, and cryptographic keys can live on enterprise equipment or consumer equipment that might look like a key fob with a screen like interface. But most importantly, all Bitcoin are controlled by keys. And then the question becomes, who has the keys? A lot of times people think if they have Bitcoin on Coinbase, that Coinbase has their keys. And the important distinction is Bitcoin does not have your keys, Coinbase does not have your keys. Coinbase has their keys, and if you want your Bitcoin, you've got to go knock on the door of Coinbase and ask for your Bitcoin. That is very parallel to the legacy monetary system. And just as the way you think that the money is in your bank, and if you want to spend your money, that you've got to go ask the bank. That might be in the form of swiping your credit card. It's all permission. If your bank decided they didn't like you, or you did something wrong in their view, or some government bureaucrat without due process, like what happened in Canada, then you can be shut off from your life savings. It's a centralized system. It's all based on permission. And if Bitcoin is valuable because there will only ever be 21 million, there's going to be a lot of people that might want your Bitcoin, or might have an incentive to prevent you to having access to it. And in Bitcoin, what you're able to do is to control your own keys, and to be able to do that in a secure way, where you don't just have all of your money on a single key, such that you can make mistakes and live in a world where you eliminate all single points of failure, but also be highly fault tolerant, so you can make one mistake or two mistakes and not lose your money. But what that preserves is, it preserves that you will benefit from this value of Bitcoin's finite scarcity. If Bitcoin is fundamentally valued because there will only ever be 21 million, holding your own keys ensures that no man, woman, bureaucrat, government official, judge will ever be able to stand between you and your money. It's what ensures that you are uncensorable. And I think that there's some people who will look at that or hear that and think, what's the big deal with having the money at the bank? Well, the problem is the money isn't at the bank. They lent it out, and that's why they have to print more of it. And if you want to ensure against censorship as well as socialization of losses, then you will hold your own keys. The important thing is that the analogy we like to use at Unchained is, it's not harder than driving a car. Most people now drive a car like it's second nature, but you got to actually learn, because if you get behind a wheel and you've never driven a car, you can do some damage to yourself. So it is one of those equations with great power comes great responsibility, but it's also not hard. And that on the other side of being able to preserve and ensure that no one can prevent you from accessing your money, or ensuring that no one lends it out and potentially loses it, it's also the only way to sever the connection in a real way from the internet of how your Bitcoin are stored. And it actually makes the security of Bitcoin more tangible and more physical. And that if you're using a Coinbase or some other app to secure your Bitcoin, the only way that you access your money is via an internet connection. And that's the same way that your account will be compromised. That someone will hack into your account, and while Bitcoin can't be hacked, your Coinbase account can be hacked. And so when you actually take possession of your private keys, you're not only preventing somebody from being able to lend out your Bitcoin or prevent you from accessing it in the future, you're also severing the from what is something that is digital, and you're then shifting to a world of securing a digital password, say, to an account, to a physical device, and then you're geographically distributing those devices such that you don't have a single point of failure. And when you do that, a lot of people think about, when people say you got to hold your own keys, that it's an ideological principle. It's really one grounded in security.
Got it.
And you reduce your attack surface when you can sever the connection to the internet and eliminate single points of failure. And if you're working with a third party, regardless of what you think about that third party is a single point of failure. That connection to the server, whether they're well-intentioned or not, is the single point of failure, either because they restrict access or because the same way that you access your money is the way that an attacker that's targeting you would. And you solve both of those problems by taking possession of your own keys. And in the context of Unchained, what we help people do is secure Bitcoin, the same Bitcoin with multiple keys, and we sit there alongside of them to be part of the process and to help augment.
What is the benefit that someone is getting by having multiple keys? Is it just more security?
It's eliminating single points of failure.
Okay.
So imagine you had $100,000 stored. It could be stored with a single key. Or let's just take an example of one Bitcoin.
Mm-hmm.
You could secure one Bitcoin with a single key, or you could secure 100 Bitcoin
Mm-hmm.
with a single key. You could also secure one Bitcoin with multiple keys
Mm-hmm.
and 100 Bitcoin with multiple keys. And when you have multiple keys, so in the context of Unchained, we help secure people in what are referred to as 2 of 3 multi-sig vaults.
Mm-hmm.
There are 3 keys, and 2 of them are required to spend any Bitcoin. Now, imagine that you had 1 Bitcoin on a single key,
Mm-hmm.
and somebody that shouldn't have found that key found it. They'd be in a very clear position to move your Bitcoin. Now, imagine, and once it's moved, it's there are no takebacks.
Mm-hmm.
Bitcoin transactions are irreversible. That is part and parcel to how Bitcoin is able to affect its fixed supply. And what it does is it shifts the burden onto the holders of the currency to be accountable.
Mm-hmm.
And so if I had 1 Bitcoin on 1 key or 100 Bitcoin on 1 key, that is a single point of failure. If the wrong person gets a hold of it, they can move the Bitcoin or be authenticating a pin away for moving all your Bitcoin. But the key thing is you have a single point of failure if you're using a single key, and that even if you create a backup, that backup is also a single point of failure. And then some people will split up the backups, and then single points of failure derive from there. So the important thing is, if you're going to have a material amount of your savings in Bitcoin, that you want to eliminate single points of failure, especially if you are taking self-custody. And you can do that on your own, and there's tools to do that. We help people do that as well. And again, in our circumstance, there's 3 keys. Our clients have 2, and 2 out of the 3 are required to move any Bitcoin. What does that ensure? That ensures that we can't move our clients' funds. There's no atomic way for us to move our funds without their participation. We can help our clients move funds, but importantly, a client could lose a key. And if they lose their key, whether it's just they had a boating accident and their key fell in the water, or someone broke into their house and stole a key, that their funds are not at risk, because 2 out of the 3 are required to move any Bitcoin. And that's actually at a Bitcoin protocol level. It's not at like an Unchained account level. That's part of what we help educate people through consultations, and if they go through our concierge onboarding process. Our whole system is designed to educate people on what they need to know. But like the short answer to your question is like the idea people should connect with is like, if a single key is a single hardware device and the wrong person gets it, then all their Bitcoin's at risk. If they have any non-immaterial amount of savings in Bitcoin, that think about it like a safe deposit box. Rather than 1 key, I need multiple.
Mm-hmm.
And that multiple key structure helps to eliminate a lot of risk, both malicious and non-malicious. And oftentimes it's just protecting you from yourself than anything else, because those are actually the more common instances.
Do you think legacy banks will start to do some of these financial services that you guys are providing? Because it is something that I know you said that like you can do set up a multi-sig for yourself, but like personally for me, I'm like, I would love to have just a second party that's somewhat accountable here that I can rely on for a little bit of the peace of mind. I know there are other people who just like don't want anyone else involved with their multi-sig, but like legacy banking, how does that transform into like what Unchained's doing? Because there's clearly a bridge there that they would need to cross in order to start getting into like the Bitcoin security services.
Yeah, I think that it will ultimately come down to individual decision makers or boards as decision makers. It's inevitable.
Mm-hmm.
Yeah.
That legacy banks start to understand Bitcoin. That it's also, Bitcoin's hard to see.
Mm-hmm.
It's hard for someone that, like the legacy banking system is the problem. So those people are particularly poorly positioned to be able to see and understand Bitcoin and then capitalize on it. One of the reasons is because everything about the legacy system is centralized. That their whole brain operates on it. I'm not going to describe every individual, but the system is itself. If I think about an individual bank and then I think about the banking system, it is a centralized system. And when they think about software development, they think in a very centralized frame of mind. Because doing things in a more centralized frame of mind or architecture is actually easier. But easy is not what we're solving for in the context of money. What is most important is like, if you can't go to Twitter, it's not a big deal. Come back 5 minutes later, it works. If you get kicked off Twitter, might be some consequences to free speech, but like, you go about your daily lives. If you lose access to your life savings that's stored in a form of money, that's like a no comeback scenario.
Yeah.
And so I think that it's unlikely that people from the legacy banking system really contribute or innovate in any material way. It's not to say that there aren't or won't be banks that do it, but that my assessment of it is that in order to do something like Unchained or develop other infrastructure in a Bitcoin native way, that it likely won't be people who built an entire system on the tenets of permission-based security and centralization as an architecture to solve problems. But it also doesn't mean that people who build infrastructure on Bitcoin in like a custodial way in any way bad, because there's not a one-size-fits-all solution. I would just really encourage people to only work with people that are developing infrastructure for Bitcoin versus a broad-based crypto, because there's a big difference between, you know, developing a penny stock casino versus someone that's developing infrastructure to help you manage your Bitcoin.
Yeah.
And so, yeah, there's a spectrum of infrastructure. I just think that people will have to think from first principles to develop valuable infrastructure in Bitcoin. And for those people who figure out Bitcoin that want to develop infrastructure, they're probably going to leave whatever bank they're working at.
Yeah.
So, I mean, you know, we would love for, you know, certain local banks to get involved in potentially holding a key on behalf of clients that they already know, and I'm sure there will be some of those, but I just don't expect that in a big way to materialize, and that it will actually be new infrastructure and Bitcoin companies that eventually become bank-like structures that help people manage their money. And in our case, we can't lend their money out. We help them secure their own Bitcoin, but that it will actually be kind of a rebuilding of the infrastructure rather than more of kind of the old system that's broken, merging Bitcoin into it.
Is there anything that you think the Bitcoin community could be doing better that would lead to higher adoption?
Yeah, probably being like a little bit more toxic.
Yeah.
Yeah.
A little bit more toxic.
Yeah, I mean, I'm joking. Like, I think that
I agree.
you know, a lot of Bitcoiners are very principled, and that, you know, like once they see Bitcoin, they figure it out, and I'm myself kind of at fault of this. I try to consciously put myself back in those shoes of somebody that couldn't see Bitcoin, and that when, you know, and I've really like distilled down my Bitcoin 101 presentation to like try to put myself in that frame of mind to then relate to how crazy whatever it is that I'm saying, like how it's being received.
Yeah.
Ultimately, we have to reach some critical mass and escape velocity of people that intuitively understand Bitcoin, and that infrastructure is very important, but education is probably, like, you need the rails and the infrastructure to be able to secure Bitcoin and be able to move money around securely. That's important, and that's being developed. But adoption, like, is a knowledge distribution game. So more books, more articles, more people kind of sharing their stories and experiences. I think, you know, like one of the things is, you know, someone like Cole Bolton and KNC Cattle, like,
Yeah.
the cattle rancher hearing about Bitcoin and why it's important from Cole versus me is more relatable.
Yes.
Right? So the more people that have figured this out that the more willing they are to contribute to the educational piece of Bitcoin, because it is hard to understand what money is. It's not rocket science, but it requires some intentionality, and it requires, 40, 50 hours of time, maybe, give or take a multiple, or less, depending, but, just thinking about, an oil and gas guy communicating to oil and gas people about why Bitcoin is relevant and relating to ideas about their industry. I can do it, but I'm not going to be as effective. But I also think that happens very organically in Bitcoin. So I think that people being encouraged to do more of that would help accelerate adoption, but I also think that adoption, it will happen as a matter of fact because of the incentives of the need for people to hold money and the objective evaluation of what makes something money or not, and whether people are consciously considering that, they are consciously or subconsciously doing it.
Yeah, I was just about to add to that too, like your conversation with Cole, it seems like that community in general, or like communities similar, like these ranchers, kind of understand the idea of decentralization and how regulation impacts their business because it's happening to them on a daily basis. So their idea of preserving their wealth is so intimate and close to what they're doing that when they hear Bitcoin, they light bulb goes off like relatively quickly. It's like multiple people have said that when we were at the Beef Initiative event up in Colorado, a lot of the ranchers like basically said, yeah, it took a few times like getting engaged with the principles of Bitcoin, and they understood the value of like why owning some might be important to their like future wealth of their entire family. So
in my experience, it's been people who run their own business, generally when it's tightly held or closely held, and they are in the market every day and experiencing the impacts of inflation, of their supply chains, of finding it harder to find labor, or their good resources needing to be paid more because there aren't a lot of high quality resources. But all those things are related to this broken money system, and that if people have created, particularly people who run their own business, and what I see more is private because they're typically smaller and more closely held, so the principals can make decisions based on first principles. If they're in control of their own wealth, or they've created their own wealth, created their own business, that they know how hard that is. They're dealing with the real world implications on a day-to-day basis. They very quickly key in on, it doesn't make sense that the central bank's creating this much money, and that's a problem. It's not going to end well. And I think when they start to see Bitcoin or be told about it and approach it from this perspective of the monetary side of it, that it's like connecting the dots to a problem that they've already known that exists. They now know it better, and now this is being presented as a solution, and they're in a much better position to be able to evaluate it and then act on it. And I would perceive probably that a lot of the ranchers fit that equation of operating their own business, feeling like a 1,000-pound weight on their shoulders, the effect of money losing its value. And here come along some people that when you actually get into a room with them and sit down with them, aren't a bunch of crazy people talking about how this is the next tech fad revolution. It's actually one about money, and we're just fixing a form of money that is intuitively, when more kind of hit on its head, understood to be broken.
Yeah, the dairy farm that Harrison mentioned before we hit the record button, husband and wife, multi-generational dairy farmers out of Central Texas. I think they've had the farm for 4 or 5 generations, and like just such principled, incredible people. Like they could have sold the farm many times for over $15,000 an acre. They'd be multimillionaires, but they wanted to continue the family legacy and provide people with the most nutrient-dense animal protein dairy possible. But just due to the regulation and just hardships that they've experienced as farmers, they were telling us like they haven't been able to buy a new tractor in over like 20 to 30 years. So you imagine if you can convince a couple like that to own Bitcoin and own a currency that actually does its job, they'd be able to sell some of it, buy tractors, do the basic things that they need so their business can be thriving. So it's exciting to think about, and we just think a lot about the points that you're talking about is like, how do we help coach other people to be able to speak to ranchers or people in oil or some of these other industries about why Bitcoin makes sense for them?
Yeah, and I would encourage, it's like, my approach is the rifle shot approach, like, go hard on, somebody that's susceptible of likely to understand it. Or another way really is people will not see Bitcoin and will not be able to understand Bitcoin unless they want to see it. And that means that that something has to have happened to open up their minds to be curious, to like ask that question, like, all right, this might seem crazy, but like, tell me, because if you try to go explain Bitcoin to somebody that doesn't want to know, the way that they're, and this is just based on all of my experience, which isn't perfect, but I've educated a lot of people and pursued different paths for reasons, is that if someone is resistant to it, of understanding the question of what is money or how Bitcoin could be money or what the properties are that make something a better or worse form of money, that when you're explaining them things, their mind is quickly rationalizing why whatever you're saying is wrong. Like, you're like, Bitcoin's not too volatile as money. It's like, oh, Bitcoin's too volatile as money because, money needs to be printed, and, if they're responding to you in that way, they're not actually listening. They're hearing what you're saying, but their mind is triggering to say, pull the very shallow reason for that not to be the case. And there's just a fact that they haven't thought about it that much. But that the output of that has caused me to create filters, where it's like I try to cast the wide net and require that people filter in. That I create opportunities for people to learn, but not force it onto people, such that, an opportunity might be there's a Bitcoin meetup. Do you want to come? If they have to get themselves there again, there's that idea of intentionality. They had to be intentional about coming, and they filter into something. And then if they filter in, then that's a signal that they want to know. But if you go to an audience of people that know nothing about Bitcoin or aren't there to understand Bitcoin, and you give them a talk about Bitcoin, like you're searching for a needle in the haystack versus shooting fish in a barrel.
Yeah.
And so I would encourage people to cast that net, allow people to filter in, but then once somebody has understood it, then to encourage those people to be the way in to help people within their community see it, because they will inherently relate to those people more than people from the outside looking in, particularly on an industry level, about businesses or close networks of friends that have trust there. And so, like that family that you're talking about, like a lot of people can think about saving money in Bitcoin, and they know how volatile it is, and they get concerned on either side. Or I could buy Bitcoin, it could go up 10x, and then I could buy more farm equipment. I really encourage people to think about that X and Y axis, and that incentive of, if I just have a form of money that can't be printed, it will store value over time. And so it's not necessarily what happens in a week or 2 weeks or a month or 60 days. It's just imagining over time, and in Bitcoin's world it's very volatile, but over time it increases in value for that fact, and that as a function of time, on average, every unit of value that they produce, it might be, a gallon of milk or a head of cattle, that at some point in the future, that value that they produced in the past will purchase more, and they will be able to, because if you think about it as an individual transaction, it's really like gallon after gallon after gallon being sold, and if Bitcoin's volatile, but you're progressively storing some small percentage in Bitcoin, that each unit as a function of time will purchase more. And then what does that afford you? It affords you then the ability to invest in more infrastructure, because your value is being stored better. The way I think about it in my individual life is, because I've been storing money in Bitcoin, my money in Bitcoin, it's that now I'm in a position that I only have to work if I want to work. But that didn't happen the first time that I bought some Bitcoin. It happened over storing wealth in Bitcoin over 6 years, And you know, it's like the Bitcoin that I bought the first time was 6 years ago, and then added on over time. But by storing money or storing your wealth in a form of money that actually has incentives aligned with you, that it's just not guaranteed to lose its value, and that there is an underlying property, that one being scarcity, that's going to store wealth, that you're like, oh, I actually have capital now, and if I want to go make an investment, I can. And it's not like stock investing, but it's like, I only will, you know, store that wealth so long as I need to have it stored in Bitcoin, and then I can also spend it on a house or car. But if you think about just like the core principles, it's like, imagine everything that you produce in the world degraded in value. And then just envision a world where that's not true, that actually does produce a lot of freedom and a lot more flexibility. And that's whether you want to invest in more infrastructure to expand your farm or your ranch, that's an avenue, or if you want to, you know, consume something, that Bitcoin solves both of those problems. But it really does so as a function of time and that kind of appreciation as knowledge distributes and infrastructure in Bitcoin gets better. And so I just I try to key people in on, not like, even though there are individual decision points, it's thinking about the core principle and thinking about it over time, rather than like, I bought Bitcoin and it went up 10x and that's why I benefited from it.
What inning do you think we're in terms of Bitcoin adoption? Because I feel like a lot of people think about crypto and they're like trying to make a trade on and make a return on their money, which I think a lot of people who are into Bitcoin obviously want to make money off it, but it's like,
that's the thing, they're not making money off it, they're preserving their purchasing power by storing their wealth in a better form of money.
Right.
And that truthfully, and like, it can be hard to discern about like Bitcoin versus crypto. What I would just tell people is that that they need to go deep on Bitcoin and then evaluate everything else. Because if you go deep on Bitcoin and you start to understand the questions of what is money, what makes something money, does Bitcoin possess those properties, it would be impossible to look at 1,000 different things and think that you're going to come to a rational conclusion. That you have to think about the economic principles that could allow you to not have to consume as much information, but still arrive at the same answer. And in my world, it is Bitcoin has been able to achieve the optimal monetary policy, that one that can't be printed or that has a finite supply in a terminal state, and that money converges to one. Those are the two principles. And those really have nothing to do with Bitcoin. It is there an optimal form of money or an optimal monetary policy or supply, and is a form of money that can't be printed better than one that can inflate at 1% or 2% or 3% and is zero, the optimal state? That has nothing to do with Bitcoin. Does money converge to one based on the very problem that it solves and being one of trade? Again, that has nothing to do with Bitcoin. But if you come to the conclusion that yes, the best form of money is the one that can be printed, and yes, money converges to one, you're going to start looking for the best form of money, and you start to evaluate the properties that are inherent in Bitcoin, that it has a finite supply, and it can be divided and aggregated very easily into very small and large units, and that you can transmit those properties over a communication channel, namely the internet or other. You will then tie it back to, and if money converges to one, then why do I need, a stock portfolio of crypto? But you will never arrive there if you're like, okay, there's Bitcoin and there's cryptocurrency 2 and 3 and 4 and 1,000. It's no, go the path of understanding the monetary principles, because that explains everything that's happening at a higher order. So I would again just encourage people to kind of do the deep, because that is also a defense mechanism. People are like, oh, I don't understand, I will never understand, so I'll buy a few of these. And it's like buying a lottery ticket, and there's a reason why lottery tickets are regressive taxes.
Are you generally optimistic and hopeful when you think about the future?
Yeah, like when I first figured out that the financial system was totally done, it was like very pessimistic. It was reality.
What year was that?
That was like 2016. Like I basically came to the conclusion that they were going to have to print money, like there was never a way out. They were always going to have to print more money, and that at some point in the future, again, never really anchored to. I never really anchored to a point in time. I probably like formulated like ideas of concepts of time, but I knew that it was on this trajectory of breaking, and that the breaking point was inevitable, and that had serious consequences. And that was like, that's not fun to think about. Most people just rationalize it by not consciously wanting to know. They'd rather be ignorant to that fact. And then I figured out Bitcoin, and I figured out that Bitcoin was the solution to this problem, and that it's like I think that there's no getting around the fact that we've lived in a debt-riddled world of excess that was unsustainable, and that everyone's going to have to live with less comfort than we've become accustomed to. And there's going to be some more challenging times that come ahead, but Bitcoin is the light at the end of the tunnel. It's not the light at the end of the tunnel because it's some religion or hope and a prayer. It is the actual solution. The thing that has caused all these problems is this: the money was broken, and printing money has serious negative economic and societal consequences. And here this thing Bitcoin is, and it's objectively the solution to that problem. And that I think about like the idea of like the next day having some rational, logical reason to believe that the future is going to be better than the present, and that when you start to understand money as a tool and how civilizations or economic structures advance, you're like, oh, having a sound form of money is critical to that equation. Here this thing is Bitcoin, and no matter how fucked up the legacy system is, this thing is the solution. And we're going to go out and build the infrastructure to be able to make it more accessible and easier to use and more available to more people. And people are going to create books and podcasts and write articles on the internet, and knowledge is going to distribute. That there's a path out. If that solution didn't exist, it would be a very like pessimistic, worldview, I think, for a lot of people. And just the existence of that light at the end of the tunnel, even if you don't know how volatile or potentially uncomfortable the path between here and getting out the other side is, that just the mere existence of it creates this great sense of optimism and hope. And then when you kind of get in with like the people that work on Bitcoin, it's kind of like being able to operate in that world where you know that there's probably some shit coming down the end of the line, but also being able to be like, all right, let's get up and go to work on being a very small part of a much bigger solution. And there's something that creates great optimism of being around people like that as well. So
time to build. Like you see the life raft, and like it's getting you away from the sinking ship, and then you need to actually like get to work and start doing stuff to like improve what that new world is going to look like.
Yeah, absolutely. And like some people might not go down the rabbit hole because they might get the sense that there's something really screwed up, and they might just, ignorance is bliss. And then there's Bitcoiners, and they went down the rabbit hole, and they see the light at the end of the tunnel, and they're, on average, at least the ones that I interact with, that's like the moment isn't too big, but it's also because they don't let it be about the moment. They're just like, all right, I'm going to go build this. I think this tool needs to exist, or I need to educate people about Bitcoin, and there's some piece of content that I can deliver into the world that I think adds value, and they just go do it, right? Like Bitcoin doesn't have a marketing department, it doesn't have a CEO, no government, company, body controls it, but people, when they figure out Bitcoin, it's like the greatest secret that exists and very few people understand, and the economic incentives to produce value in and around it are, practically speaking, both uncapped and untapped, increasingly being so, but that people do it because there's an economic incentive, and then it leads to a lot of that hope and optimism, and that's a function of being able to work on a project that is a light at the end of the tunnel, but then also the people that you meet along the way. Like there's a real thing to being around a group of people that are builders hopeful for the future, optimistic for the future. But that kind of key thing of that, you can think about it like the X and Y axis. That little small difference between this expectation that things are getting better versus things are getting worse is night and day.
Totally.
You might think about it as this marginal difference of kind of slightly up versus slightly down, but there's a real negative psychology to the expectation that things get worse versus the expectations that things get better. And in Bitcoin's case, it's not based on literally just some ungrounded hope. It's like, oh, I formed this very logical, rational reason why things got the way that they were, and I'm actually working on the tangible object or a project that helps support it that is measurably or objectively measurably the solution to it.
Yeah.
It's definitely, it feels like the most optimistic corner of the world right now. And it's awesome. I'm curious, are there any materials that you would recommend giving to like a friend? I know you mentioned the Bitcoin Standard, your own writing with Gradually Then Suddenly. Anything else out there that's worth people paying attention to?
Yeah, I would definitely just reiterate the Bitcoin Standard. My series, Gradually Then Suddenly, there's 17 essays. They're each designed to be accessible to someone who's brand new to Bitcoin. And they're kind of meant to be read individually, such that you don't have to read all of them to fit together, but you can kind of go to where your questions are. There's a lot of other resources. Let's see, Inventing Bitcoin by Jan Pritzker, if you want to start to understand some of the more technical aspects. Some of my resources on the Gradually Then Suddenly blog, which is on our website at unchained.com, have some of that too, but Inventing Bitcoin's a great resource. Layered Money by Nick Bhatia is another good book that is kind of more on the side of the Bitcoin Standard, of explaining more of the why. Inventing Bitcoin is probably like the first, it's a quick read, and if you want to start to get into like some of like the glue of how the network works, it's probably the best early resource, or more consumable and accessible resource there. Mastering Bitcoin was really critical for me in understanding. I'm not a software developer, but it is a programming book. But it was important for my understanding actually how the Bitcoin at a protocol level works. And if you're determined and want to really know, like, that's kind of probably like the third or fourth book down the rabbit hole. Podcasts are great sources. The TFTC podcast with Marty Bent, the Stefan Livera podcast, Preston Pish and Bitcoin Fundamentals. So, yeah, and that's one interesting thing that sometimes it's hard for people to decipher between Bitcoin and quote crypto. There's like 20 plus books, like maybe 50 books on Bitcoin, and then like just go try to search any other, like, what books there are, So those books, probably in order: Bitcoin Standard. Highly encourage people read mine. Inventing Bitcoin, Layered Money. I'm sure I'm leaving some out. Listen to podcasts. Guy Swan, the Bitcoin Audible. Any format that you could think about. There's Bitcoin content. The Bitcoin Times, which is something that Alex Svetsky puts together. It's a once a year publication, kind of evergreen content. Kind of talks more about kind of the why behind Bitcoin, I'd say. That's also a great resource. So yeah.
Love it. Look, man, this conversation's been amazing, and we just wanted to thank you for all the work that you're doing. You've helped push our knowledge and level of understanding of Bitcoin forward, and also you creating this community. This has been a huge launch pad for our podcast. Like, we've gotten to connect with Marty, use the studio multiple times, create that in-person connection with guests, and a lot of that's because of your vision. So we just wanted to thank you, and I know that we both feel even more hopeful and more optimistic for the future because people like you exist in the world. So just very, very appreciative of everything that you're doing, and just thankful that we're now friends, and just want to keep going.
Yeah, it is. I appreciate you guys being part of the community, and just even recording this podcast, not because I'm on it, but in here using this studio and helping to distribute knowledge to more people, and you guys can relate to your audience in ways that I might not be able to. But one thing that is true about the Bitcoin community, at least the local community here, but again, no technical Bitcoin community, but the people that that are Bitcoiners, they will change their behavior.
Mm-hmm.
Especially here in Austin, and even if you don't understand Bitcoin, like when Cole started to accept Bitcoin as payment and start to store some of his wealth and treasury in Bitcoin, people, there was a connected value proposition, but then also people said, hey, like that guy's a Bitcoiner, like I'm gonna help him out if he helps me out,
Yeah,
so
absolutely.
that Bitcoiners will change their behavior. Now they will do it for people that they think are actually delivering value to them and their communities. That it's not just out of charity, and it's also like Bitcoiners are great bullshit artists. You're not bullshit artists. They've got a great radar for detecting bullshit. And so, but when they see value for value, and I'm not speaking on behalf of it, but I can speak for kind of how I've seen this Austin local community start to integrate with what Slim's doing at the Beef Initiative, and what Cole is similarly, but what Cole is also doing at KNC Cattle. Jason getting that kind of mesh of people together. Seeing you guys, I know you guys just had Jimmy on the podcast recently as well. That there's just a paying forward, but then there's also a selfish incentive, which is wanting to be around good people and wanting to help good people, because it ultimately moves us all forward. So appreciate what you guys are doing and being part of the community, and then ultimately helping distribute knowledge, because I think that's the single greatest driver to driving Bitcoin adoption.
Absolutely. And it's just been great to be a part of everything that is happening here in Austin too. So I think looking forward to everything that's to come with Bitcoin and everything that's happening just specifically in Austin around the Bitcoin space. So appreciate you coming on, and hopefully we'll continue the relationship here this next week with BitBlock Boom.
Yeah, I hope to get some of that fine milk from LaGrange, Texas that you guys are going out to tomorrow.
We'll show up with a big cooler.
Okay.
Start passing gallons out.
I'm gonna hold you guys to that.
Yeah.
And look forward to doing more of these, and helping you guys grow and contribute, and finding ways to cross-pollinate between the important work you guys are doing in the food space, and help people understand the critical nature of nutrition, and then also seeing the symbiotic relationship between